Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. As you can see, throughout July and August, the downside had been given a testing. But the low water mark of the 18th of August was pivotal to the construction of what happened next, as the market failed to break down through the neckline, currently 818, of the big old 50% Fibonacci line of the October 2021 to January 2022 move, spinning on its own axis with a pipe bottom and moving higher at the time. I suspected the next significant event would be in the second week of September, when a then declining short medium moving average, currently 905, was to hit the market. Well, for about a week, this moving average tried to cap the market's rise, but it all ended in failure, as in early September, the market broke higher. In all this time, since late August, the market had meanwhile been constructing a new pattern, a bull channel, currently 951 even to 1017. This was easy enough to do once prices overcame the short medium moving average, as there was a small free zone above, all the way up to the July 2012 high at 957. However, 2 weeks ago, the market reached the 957 area, and I thought at the time there might be issues. You see, 957 is the gateway to a congestion area between 957 and 1001, within which sits the slowly rising long moving average, currently 982. A lot of this congestion was made up from the 2011 and 2012 action and was easily breached on the way up in February and on the way down in June. However, at those times, they did not have the additional reinforcement of the long moving average, and it is this, along with the upper bull channel line, that constrained the market last week and early into this week. Now, two final points. Firstly, creeping in from above, we have the declining medium moving average, currently 973, which provided, if not additional resistance, then additional indecision, and also support after a fashion, if the first 3 days of this week are anything to go by. What was most interesting this week was yesterday's action of a combined bearish opening Black Mariposa and bearish engulfing pattern. This pattern almost, but not quite, broke down through nearly all the congestion between 957 and 1001 that it had been through, not quite making it through it at the last point. Today has been higher, but as yet not really up to those levels seen earlier this week. Now, this action, though, is still within the bull channel, so there is no immediate cause for concern, but it is worth noting. My second point is to discuss the somewhat surprising weekly key reversal up here 2 weeks ago. This gave an added spurt of bullish enthusiasm, enough to try and tackle the resistance area at 957 to 1001. But as to whether it has been enough to overcome it, well, we still have to see if that happens. Yet at the very least, it does give further backing to the bull channel idea. Minneapolis wheat. Over July and August, this market had been a sideways to lower channeling market and not as exciting as earlier in the summer. In early September, we saw the start of another bullish pattern. It seems to have been prompted by, of all things, the approach at a steep angle from above of the short medium moving average, currently 928. And rather than this moving average acting as a cap on any rise, it instead acted as a trigger for a move higher. The move up was such that prices overcame the 50% Fibonacci line of the August 2020 to May 2022 move at 956, and the combination of the November 2012 high and the 50% Fibonacci line of December 2020 to May 2022 move at 974 together, as well as the September 2012 high at 986. However, this last high at 986, though breached both late last week and this week, has as yet not seen a single close over it. Yesterday's counter bullish engulfing pattern, bearish engulfing pattern that closed below all the congestion bar the 50% Fibonacci line at 955. Well, that did put a bit of a scare into the bullish incentive. but the move down failed to close below a key newer bullish construction that had been formed since early September. This is a nice segue into the bull channel come ascending expanding wedge pattern we've seen currently 974 to 1055 developing in this time. I called this construction rudimentary in previous commentaries, not because it was rudimentary, not only because it was rudimentary at the time, but also because this market is way behind both Chicago and Kansas City in its construction of such a bullish pattern. You only need to look at where the ever so slowly descending long moving average is at, currently at 1032, above the market, and the declining medium moving average, currently 1009, above the market. And both their distances above the current market compared to the same moving averages in other grain markets to appreciate how backwards the actions have been here. Last week I highlighted the possibility of a dead cross of these two moving averages. Well, we did have a dead cross, but it was only just. The long moving average just managing to maintain once just going through to drop it just ever so slightly to qualify it as declining, but it is a poor dead cross. That is for sure. Anyway, if the market's still within the bull channel come ascending expanding wedge pattern, if only, it's time to look at the next pieces of overhead resistance, and specifically one that is approaching the market, and that is this declining medium moving average. This is now entering the frame of the market, and it'll be interesting to see the market's reaction should prices start pressing it. Beyond this, we have congestion at 1034 from the July 2012 high, and of course from the long moving average. However, the next larger congestion area above is between 1055 and 1083. Yet I have a suspicion that this area may not be as great a resistance as may be imagined. A lot of it is Fibonacci related, and what isn't, well, it dates from 2011 and 2008, having been broken on both the way up and down. I've added a question mark to those levels last week, and I will continue to do so now for a little while longer. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.